Most people think compounding is something that happens on paper, in charts, in retirement calculators, or inside finance textbooks. But in real life, compounding doesn't feel exciting at all. In fact, for the first few years, it feels like nothing is happening. And that's exactly why most people never benefit from the power of compounding, even though they've heard compound interest explained 100 times. Today, I want to show you how compounding really works, not in theory, but in real life, and why it's the most misunderstood force in long-term investing, wealth-building basics, and how money grows over time. If you truly understand this, it will change how you think about money, patience, and progress forever. Before we go any further, if you care about building wealth the calm, realistic way, without hype or stress, make sure to subscribe to Life Plus Money. This channel is about simple investing, explained, financial clarity, and long-term thinking that actually works in real life. By the end of this video, you'll understand why compounding feels invisible at first, why most people quit right before it starts working, and how real wealth is built slowly, then suddenly. Let's break it down. Here's the uncomfortable truth most people never hear. Compounding does not reward effort early. It rewards time and consistency. When you first start investing or saving, the progress can feel almost insulting. You put money away. You do the right things. You wait, and the numbers barely move. That doesn't mean compound growth isn't working. It means compound growth is backloaded. Most of the results happen later, not evenly over time. Think about planting a tree. For years, all the growth happens underground. Roots spread, strength builds. But above the surface, nothing looks impressive. Then, one day, the tree starts growing fast. Compounding works the same way. This is why people who understand long-term wealth stay calm, and people who don't feel frustrated and jump strategies constantly. The biggest mistake people make with compounding isn't choosing the wrong investment. It's quitting too early. People expect compounding to look like steady progress, constant motivation, and visible rewards. But in real life, compounding looks like boredom, slow progress, and doubt. This is where money psychology matters more than math. If you need excitement to stay consistent, compounding will never work for you. That's why consistent investing beats intensity every time. Small investments over time matter more than emotional decisions. Let's make this real without overwhelming you with math. Imagine two people. Person A starts investing at 25. Person B starts investing at 35. Same strategy, same investments, same returns. The only difference is time. By retirement, person A ends up with dramatically more money. Not because they were smarter, not because they earned more, but because time did more work for them. This is why starting early matters isn't motivational fluff, it's structural reality. Time is the most valuable asset in investing, and once it's gone, you can't buy it back. Here's the mindset shift most people never make. You are not trading money for returns. You are trading time and patience for exponential growth. That's why people obsessed with speed and hacks struggle with passive wealth building. They focus on optimization, shortcuts, and constant action. Compounding rewards, waiting, simplicity, and boring repetition. This is why the best wealth strategy often feels like the boring wealth strategy, and boring is powerful. Quick pause here. If this way of thinking about money feels refreshing, hit subscribe. Most people never hear this perspective, and it's the foundation of everything we do on Life Plus Money. One of the biggest misunderstandings about compounding is thinking it's something that suddenly kicks in. It doesn't. Compounding is always working, just quietly. It's the result of repeated actions over long periods without interruption. This applies not only to investing, but to skills, habits, reputation, and income. The math is simple. The discipline is hard. That's why financial patience is a real competitive advantage. Most people can't stay consistent long enough for compounding to matter. Here's something rarely talked about. People who are actually building wealth don't look busy. They aren't constantly changing strategies. They aren't chasing trends. They aren't stressing over daily movements. They have systems, and systems compound. This is the difference between being busy with money and letting money work over time. That's also why how rich people think about money often looks underwhelming from the outside. They're not chasing excitement. They're protecting compounding. There is a moment when compounding becomes visible, but it happens later than people expect, usually years later. That's when growth accelerates, progress feels effortless, and momentum replaces motivation. Most people quit right before this phase. That's the tragedy. The payoff from compounding isn't linear, it's delayed. At its core, compounding isn't about numbers, it's about identity. It's about becoming someone who shows up consistently, thinks long-term, ignores noise, and trusts systems. That's real wealth mindset. Not affirmations, not hype, just behavior repeated long enough to matter. So how do you apply this in real life without overthinking it? Pick a simple strategy you understand. Automate it. Stop checking it constantly. Give it years, not months. That's it. The fewer decisions you make, the more compounding can work. People obsess over returns, but behavior matters more. A good strategy you stick with beats a perfect strategy you abandon. That's why personal finance basics matter more than optimization. Compounding isn't exciting, it isn't fast, and it doesn't feel rewarding at first, but it's real. And it's how money actually grows over time. If this video helped you see compounding differently, make sure to subscribe to Life Plus Money. Every week, we break down money, investing, and wealth in a way that's calm, practical, and built for real life, not theory. Thanks for watching.